With a traditional mortgage, you don't actually see the money. With a reverse mortgage, it's more like you're actually just withdrawing funds from your house.
If you want to explain to us the concept of reverse mortgages, so let's talk shop. Let's talk what exactly is a reverse mortgage and how does it work?
Sure. So a reverse mortgage is a financial product that's available to 55 plus Canadians who own their homes. It's like a traditional mortgage in some respects and different from a traditional mortgage in other respects. There's a few kind of key differences. The first one is that with a traditional mortgage, you don't actually see the money usually, right? So the money will leave the bank and it'll go to the person that sold the house to you. With a reverse mortgage, it's more like you're actually just withdrawing funds from your house. The second key difference, as I mentioned, is that it's only available to 55 plus Canadians. And the third difference is that unlike a traditional mortgage where you need to pay the balance down over time, a reverse mortgage doesn't require any regular payments. Interest is simply added to the balance over time. And then you need to pay the mortgage back with principal and accrued interest at the end of the mortgage. So it's a really powerful product for 55 plus Canadians who own their homes, have a lot of wealth built up in their homes, but maybe need some additional liquidity to address the various costs and opportunities that arise in retirement. It allows you to withdraw some of the equity that you've built in your home while being able to stay in your home, right? So traditionally, the only way that you could access equity in your home was by selling that home. But a lot of people love their homes and they want to stay in their homes. And so a reverse mortgage is a really, really powerful solution to enable you to have the best of both worlds.
I think Canadians, around the world are known as being very house rich. And that's a phenomenon we're seeing that cuts across generations. If you could speak to some of the challenges that Canadians who are looking to get approved, so particularly Canadians who would qualify for a reverse mortgage, what are some challenges they face? Do they need good credit? Are there any other barriers that they have to sort of get over in order to get approved for a reverse mortgage?
Yeah, so with Bloom, the process is quite simple. In terms of eligibility, if you are over the age of 55, you live in Ontario, and you own your home, there's a pretty good chance you're eligible. So give us a call and we can confirm and let you know how much you could potentially unlock. But the eligibility requirements are pretty simple. In terms of credit, we do check credit, but unlike a traditional mortgage, we don't rely on your ability to make monthly payments. We need to be comfortable that a few things, really that you can maintain a handful of property obligations, like pay your property taxes and insurance on time and keep your home in good repair. But as long as we're confident that you can do that, we're not so fussed about credit. So we have customers that are across the credit spectrum, from amazing credit to some credit that needs work. It's just not as important of a factor for us with reverse mortgages. On our website, we have tons of resources available to educate potential customers and their families about reverse mortgages and the benefit of this solution to help support them in retirement.
I know that this is available on your website, but to give a sense to our viewers, how much would they be eligible for? What percentage of their home value? Is that a number that you could share here?
Yeah, so borrowers can unlock up to 55% of the value of their home through reverse mortgage. How much exactly depends on a few factors like your age, where you live, and what type of home you have, like whether it's a detached home or a condo or a townhouse, et cetera. But if you give us a call, we can give you a pretty good idea quite quickly in terms of what you'll be able to unlock.
And I think this is a question that many potential customers would be curious about and happy to know the answer. Are the proceeds they receive taxable?
So the proceeds of a reverse mortgage are tax-free. It's like a traditional mortgage. You wouldn't pay income tax when you get a traditional mortgage, and you don't pay any tax when you get a reverse mortgage. It's not treated as income by the government, so it also doesn't impact your CPP or OAS. So that's one of the really nice financial attributes of a reverse mortgage.